Hi, Kayong here. Now, I hope you watched last week's video on the dollar Canadian. We are currently in that trade, and I'm personally actively managing that particular trade. And hopefully, by the end of this week, we do get some good movement on the dollar Canadian pair. In this particular video, I will be talking about the other currency pair that I'm monitoring this particular week, which is the Pound Australia. And similar to last week's video, what I'm going to do is I'm going to bring you to the chart and break down from the top-down analysis approach and share with you the thought process behind how I analyze and eventually execute a trade. So without further ado, let's go and look into the chart of Pound Australia. Right guys, so this is the chart of the Pound Australia, the pair that we'll be looking at. So similarly in the previous video and all trade ideas that I'll be sharing, okay, I wouldn't just go straight into where we are entering, where we're exiting, where we are putting our targets. Those are actually not as important as what I feel is the thought process behind how we analyze the chart and why we want to take a certain trade. Okay, so in my videos, as I share with you trade ideas, hopefully through this process, I'll be able to also share with you some insights and journey of my trading experience, and hopefully it'll be beneficial to your own trading journey as well. Okay, so not as a signal video, but more of a educational and sharing videos with you guys. So what we do is for Pound Australia, I would like to bring you to all the way to the weekly chart. Okay, and what you can see over here is that this particular move recently, okay, is an impulse, and from then this entire move to the upside is pretty slow, which what I term it as a corrective move. Okay, and what we usually do is we just use some simple trend line to actually visually guide us in terms of where the entire structure is, where will price likely move towards. Okay, and what we can see over here is that eventually there's a very high probability that every time we see an impulse followed by a corrective move like that, the future move that price will likely do, right, there's a very high probability it will go to the downside. Okay, and that's what we want to understand from the higher perspective, the higher time frame perspective. So with that, I can quickly drop down, okay, to the daily, and what we can see over here is this particular price pattern on the daily chart is pretty slow moving to the upside, right? Compared to such move like that. So this is actually still a corrective move to the upside. And what we are seeing is that there's a potential diagonal structure over here. And again, a wedge, a diagonal pattern always indicate that the higher probability is a reversal move, and which means that this diagonal is slanting to the upside, which means there's a higher probability that the future move will be to the downside. Okay, so if I were to just adjust these lines a bit to make it more in line, right? So that's a little bit of the fine tuning that will look something like that. Okay, so what I know right now is that on a weekly perspective, the future move indicates that there's a higher probability to the downside, and on the daily it's the same thing, right? This pattern suggests that the higher probability move is to the downside. So what I want to do is quickly drop to the 4-hour time frame. Okay, and I can also see this pattern over here, an impulse move and then a slow corrective move, which means that even on a 4-hour time frame, okay, we can see that with this pattern over here, okay, it suggests again that the higher probability move is to the downside. So when we have the weekly time frame suggesting downside, the daily time frame suggesting downside, the 4-hour time frame suggesting downside, this is what I usually use the term confluence to describe such situation. Okay, so we have not only one view, one time frame that is telling us a certain direction, but we have multiple time frames all saying and suggesting the same direction, right? And that builds up to the confluence, and that increases the probability of us taking a particular trade. Okay, so by now you would have probably know that for Pound Australia this week, what we are interested at is to look up for a short opportunity. Okay, so for my trading style is I usually look and take trades on the 1 hour time frame, which means that I would like to have my stop slightly tighter, and I usually take my take profit where I set my targets are usually based on a higher time frame. Okay, so with this, what I can see over here is few key points and key patterns I would like to talk about. Okay, number one is that price has recently broke this high, which is a good sign. Okay, because based on Elliott wave, we do see an ABC pattern. The C move will break the previous top, which is what we have over here. 1, 2, 3. Okay, this top has break the previous top. That's good. Okay, and another thing I like about this is that we seem to be starting to slowly correct at the top of this move. Okay, and if this week what we do get is a diagonal pattern that looks something like this, it will be a very good trade for us to be focusing to take onto the downside. Okay, and based on my style and my entry technique, what I'll be just doing is putting a pending order, a sell pending order with a stop loss just above the recent previous high. And of course this is now very draft, okay, but you get the idea is that throughout the week, if price develop this pattern, I'll be looking for the breakout of the diagonal. And my target, I would say, okay, the first target I'll be looking out for is minimum around the region of 1.8550. Okay, and depending on how price eventually move, I might even put another target all the way back down at this low over here, right? Somewhere around the 1.5915 region, which you can clearly see this is an impulse, this is a correction. We expect another impulse move to the downside. Now, even without aiming so far, right, with just this very quick estimate, okay, the risk-reward ratio of this particular trade idea, even if I take from this low around 1.8550 as my take profit, okay, that risk-reward ratio has already been, as you can see over here, close to 1:10. Okay, so it's again a very good opportunity, a huge potential trade idea that we can capitalize on for this particular week. Of course, we want to see some confirmation, which means that we want to see a diagonal forming over here. Okay, that stacks up the probability of a down move because we have patterns layering on each other, alright, all the way from weekly to daily to 4 hour to 1 hour. If we all have patterns all signaling that the high probability to downside, then we have a very good trade potential that we would like to actually take action on the particular idea. Okay, so what can potentially happen is that if this doesn't give us a diagonal, alright, and price starts to immediately bounce from here and we see a small correction over here, the whole idea is due to the downside. Alright, the only thing that differ is that my entry will be at the bottom, okay, and my stops will be somewhere around here. Okay, so same thing. The idea is to look for that sell, just that because we are taking trade at the slightly at the bottom area, the risk to reward ratio actually reduces quite a bit, from 1:10 to about 1:7.5. It's still pretty decent, right? In other words, for every dollar that I'm risking, I'm actually potentially looking to get back at least $7.50, 7.5 times. Okay, so with that, I wish all the best for you guys for this particular trading week, and let's hope for the dollar Canadian pair to start moving. Alright, we are actively managing that trade, and let's see if we can get a good one on the pound Australia for this particular week.